Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Monday, November the 20th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market. Then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. These are our trade plans. We create multiple trade plans because we do not know what the market's going to do. Therefore, we look at what the normal auction should look like, create multiple scenarios, then wait for the market to show us its hand. Then we execute the plan that best suits the market. We do not try to bend our plan to the market. We basically let the market show us which plan is best to execute. This is a subscription room. If you're interested in checking out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to. Then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So take a look at Friday. Where is my Friday? Hold on one second. There it is. Friday we had a inside day. We basically did not go anywhere. It was just a low volume, low grindy, nothing type of day that saw a sell-off into the close. Our main hypothesis was to rotate up into this 85 area. We just couldn't get there. Local time frame, smaller time frame traders the whole day with no volume participation or any participation by the RTY or by the OTF, and we basically had a little bit of a sell-off going into the weekend, probably due to uncertainty in these markets. So taking a look at the news, it is the short week this week. We've got the American Thanksgiving on Thursday. Trading is likely to be pretty light all week. Normal type trading up until Wednesday. Then Wednesday afternoon, you're going to start seeing some volume really drop off, and a lot of people take the full weekend from Thursday through, so not expecting a lot on Friday. Taking a look at the news, again, there's not a lot of news this week. Today we've got ECB, Draghi speaking in 11 minutes. That's going to be the big one. And then he's speaking again at 11 o'clock. I'm sure there's going to be lots in terms of Brexit as well as economic stuff. 11:30, 3-month and 6-month bill auction, and that's basically it for the day. Tomorrow, on Tuesday, we've got Chicago Fed national activity, wholesale inventories sales for Canada, then Red Book just before 9 o'clock, and then 10 o'clock we got existing home sales, and we got more ECB speaking. And then Wednesday, we had durable goods, continuing jobless claims, initial jobless claims, Bloomberg consumer confidence, Michigan inflation expectations, and consumer sentiment. This is where they're putting it out on a Tuesday, or a Wednesday, I should say. And then Thursday is the holiday, of course. And then Friday, there's really not any news to speak of. So very, very light news, holiday week. I would think that we're going to have holiday trading pretty much Wednesday afternoon on. So get your week done today and tomorrow. It's not likely to do much from there. Taking a look at the COT report. Interesting note on the COT is, large spec remained active net positive, but the retail went from net positive or net negative to net positive. So we're looking for the retail net positive to grow, the large spec to shrink, and eventually flip over and follow the commercial paper, to net negative, and then possibly see this market roll over. Is it going to be this week? I have no idea. Is it going to be in 2018? I have no idea. These are the clues we start looking for. Retail is usually the bag holders before a major move down. Taking a look at the macro to micro, I always like to start my day taking a look at the larger time frames and then working my way down. I'm looking at a 9 EMA, 20 SMA. I'm looking for slope and separation, strength of trend, where the trend is being challenged at the 9, violated at the 20. I'm also using this to do chart patterns and candlestick patterns. And see if there's anything that sets up for a measured move. We're in this upward sloping fork. We have been for all year, and basically, we still have room to expand to the upside. We don't even come down to challenge the trend or challenge the center line of the upward sloping fork. Until we get back into the 2400s. Going to the weekly. You can see that we have broken out of this upward daily channel, and we've come down, and last week we tested below and came down, tested 9 EMA. So the trend has been challenged. We had a lower close than the prior week, and we had a lower low. So we did violate the one-time framing, and we're seeing some weakness coming in either consolidation for the next leg up or possible start of a downward trend. But we don't challenge the trend again until we get down to the 25.57, 75 area. Going to the daily, you can see how we broke out of this upward channel. We had closed upward inside of this channel until we had that breakdown day on the 9th, and then from there we've not been able to get back above it, but we are holding right now above the 9 and the 20. We're at a decision point here at the 77. We're right back into that micro composite VPOC area, so we're right back in balance again. So this is either a jumping spot for continuation or a breakdown for a start of a larger downside trend. We did finally get a a fairly decent retrace down to the week low last week and our month low at 55.50, and since then we've rallied back up, but still right back in balance. Going to the intraday, you can see that we have just gotten back above the 9 and the 20. So we are seeing some buyers trying to step back in here again, but still in this consolidation zone here. Going to the 30-minute, you can see that we have a fairly strong trend now going to the upside since the European Open, and got good slope, good separation. I think Draghi will lead us in the next 30, 40 minutes as he's speaking for the first time today. Going to the 15-minute, you can see same thing. We're getting a little bit of a technical gap here, so could get a pullback. And then going to the 5-minute, you can see that again, trend is up. There's a couple naked crosses down below in the 75 area. Taking a look at the structure, the larger structure, you can see that after trying to break out and going and making new all-time highs, we came back in, and then we started balancing around the 77. The micro composite VPOC that goes from the 10th or the 5th of October. It shifted. The microcomposite VPOC was down here at 49. It shifted up to 77. This is generally a positive situation, but we saw a weird auction with this move down to 55.50, but the buyer stepped in, came back up into that balance, and then they gapped up on Thursday and basically chopped around that balance at 77 on Friday. And currently we are trading right near that balance. The 2-day microcomposite VPOC is up at the 80.50, that 80 area. 79.75 has been something that we've been watching. We're going to continue to watch there for an over-under line. And then if we get above that, looking for a push-up towards that value area high at the 87.25 area. If we fail to hold above the 79, likely come back and drift down, maybe even come down and close this gap here, with the main target below being this 68 area. But expecting some more chop in this area as we accept this shift in value higher up at the 77.50 area. So taking a look at the overnight inventory. Overnight inventory is about 90%, maybe 85% net short in time and volume. We've got a double distribution and a little bit of an upper distribution. We had a weak high at the 78.75. So far, they've only one-ticked it, so we'll be watching to see if this is a failed auction and they can't expand and continue the price discovery up. But the main target is up there at the 80.50, which is our naked VPOC from Thursday, and I'm sorry, from Friday, and continue this move back up. There is a little LVN right here at the 77 that's expected, and then the double distribution is going to be 74. 74 is going to be our key line in the sand for the day, for a move down to test that 70 and possibly 68 area. So if we start moving our levels over and setting up our trading chart, right now we're likely to put in another higher high before the RTH open, but I'll put the high in at 79. It's sitting right on Friday's value area low. Our overnight low is down at the 67.75, just one tick below that key target below at 68. Our VPOC is not likely to shift again, so that's sitting at 75, just below Friday's low. And then we've got the double distribution from the overnight session. So that's going to be our key line in the sand. I'm actually going to use the 73.75 because that was the low put in on the Thursday. So it's more meaningful, and this is going to become our key line in the sand. You're probably wondering why I'm not using the 70 or the 71, simply because value has gotten higher, and this is a clear area of price rejection overnight with the primary target on the downside at 71. So we have a strong target below, and then 70 is still going to be a trade level for us, but it's not going to be as important as it has been. And then our daily ATR is currently running, our 20-period full session average true range is running at 1639. So off of the current high right now of 79, our downside daily ATR target is 62.75. And our key support now gets shifted to 55.75, 56. It's actually going to be 55.50 because that was the week low. And then looking at our levels up here, we have the 76, and then we have the 82 value area high, and then a breakout above 83, but I'm going to use the 82. Again, we're likely to put in a new overnight high and take the overnight high stat out right on the open. Above the 82, look for the 84, 75, 84, 550. Based on our low of the night at 67.75. Plus our daily ATR. 84.25 is our upside daily ATR target. And then we have up here the 80 is going to be our over underline. Basically, our over underline is going to be sitting right on top of our VPOC. And then we have some resistance here at the 85.75. And then, of course, the microcomposite value area high at 87. And then above that, we go into price discovery. I'm actually going to take this off. I don't really need this here. I'll be long by then anyway. I'm really looking for that breakout up into the 89 to 91 area and back to see if we can come back up here and get above the value area that we're currently in. So we just put a new overnight high in at 79.25. Again, this is likely going to change. In terms of hypotheses, we're back up in balance. Value has shifted higher to 77.50. So my main hypothesis is a open auction in range, just outside of value, a move down to test the 73 to 75 area, maybe even to the 71, but finding responsive buyers down here and rotating us up into that 80-50 area, chopping around in here, and then pushing up into the 85 area, and then coming back and closing somewhere in around the 80, and have another day of balance in this smaller microcomposite, which will be a 3-day microcomposite. Basically, just chopping, and going sideways with probably maybe a 9 to 10 point range today. Second hypothesis is an open auction in range, just inside of value, a move up into that 80 area, possibly even the 82, then finding sellers and rotating us back down towards the 73, 75, chopping here and then basing and coming back up again and closing in around that 80. It's basically the same hypothesis, just with the move reversed. Third hypothesis is an open test drive, a move down to close the gap, find buyers right away, come up into the 83, 82 area, chop here, and then push up into the 85 area and actually continue and get price discovery up into the 90.25 area, and then falling off and closing somewhere around the 85. That is hypo 3. Hypo 4 is a breakdown day, failure to get above Friday's high, a push down into the 73 to 70 area, choppy in there, come down, take out the overnight low, and push down to the 63 area, and then basing there and coming up and closing somewhere around the 68 area. So those are my four main hypotheses. Gold finally made the breakout that we were looking for after seeing this basing pattern. This is definitely showing that gold has finally got some legs. We got up into the 91. We didn't quite get to the 1300. We got to 97.40 on Friday. So far, we've come back down. Key levels to keep an eye on gold is going to be the 88, the 83 area to the downside. If those two levels don't hold, then we're likely to come right back down to the 78, 76 area again. But if we can hold those, come up and accept the 91, the next destination is in the 1300s at the 1304.05 level. So it's looking now that this is becoming a basing pattern with the move on Friday. So if we can just hold that 78 area, or sorry, 83 area, then we should be able to get the next leg up into the 1300s and come and attack this fractal high here up at the 1308.40. That's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.